Okay, so I've got a bit of a different video for you guys today. As you know, I have maybe a little too bearish of a view on the crypto market. At least within the YouTube space, I guess I stand out a little bit from the crowd, right? And I'm going to try to break down a few different things and a few different reasons and rationale and logics that I have in my mind that help me justify my stance on the crypto market. Now, of course, I will start off by saying these are my thoughts and my thoughts alone. And, you know, I'm not a financial advisor. I cannot give you financial advice or any of that kind of stuff. It's just how I perceive the market to be based on my understanding of what I'm seeing in front of me, right? So I'm going to walk you through what I think is going on here for Bitcoin on this larger time frame. Now, this is recorded ahead of time, so I'm away this particular weekend that this video goes out, but I am going to be kind of, you know, looking at the macro level. So hopefully nothing major happened between the point of recording this video and obviously this video going live, but for the most part, you should know my expectations following on from yesterday's video and so forth. This is just a bigger macro view as to kind of where I think things are going. Okay, so let's break this down. This is the weekly time frame. We are looking at Bitcoin paired up with USD, and we're using Bitstamp as our data source. So the first thing I think that's worth noting here is that if I zoom out of this and make this a little bit smaller, you can see I've put some curved lines on here, right? And what we're doing here is essentially we're connecting the peaks of the bullish markets and the lows of the bearish markets, right? And we can kind of see this kind of curved line. This shows us the diminishing gains over time. This is pretty common. We can see that if I measure the distance from down here in 2011 up to the highs over in 2013, we can see that it was 51,000%, right? Very, very lucrative. Then, of course, we have the bear market low down in 2015 up to the highs of 2017. It was 12,000%, right? And then, of course, we have the lows actually over here in December of 2018. And then, of course, we have the November 21 highs coming in at 2,109%, right? So we can see that the rate of decrease between these numbers is actually quite significant, right? 51,588 to 12,804, for example, I think comes in at about a rate of decrease of 24.8%. And again, we can then take a look at the 2,109 versus that of the 12,000. I think that's again looking at about, I mean, yeah, that's actually quite sizable. If I go ahead and just do that, I think that's a reduction of around 83% in terms of, you know, the percentage variations. So I think for the most part, it's quite obvious that you see diminishing gains over time. Now, this is pretty obvious because it takes a lot more money to push the price significantly higher, right? The more liquidity that a project gets, the less and less volatile it becomes. So it's understandable that Bitcoin is getting diminishing gains over time. Now, what else can we see from just these curved lines, right? Before we kind of dive into more of the other kind of situations that are unfolding here, we can, of course, just acknowledge that we haven't even kissed the lower line just yet. So if we are to think that we've been kissing the higher range, then we're probably going to have to come down and kiss this lower range, right? I mean, it's one angle, right? It's obviously not that scientific. We've kind of just drawn a curved line marrying up all of the low points and the bullish runs and finding that actually, okay, there's an area here that hasn't been tapped into. So as I kind of go in ahead and expand this up, where is that? Well, you can see currently it's at around $12,000. So it would be requiring a new lower low to kind of come in here and finish that one off, right? And that then leads us on to some of the things that are going on most recently, which are different to that of the history, right? So if we come back here, and obviously what we're saying is that it's going to be history repeating itself if it comes down and kisses this line. But at the same time as me saying that, I'm also saying you that we're doing things different than we had done previously. So even this expectation may even be pulled into question. So just bear that in mind, right? We have the expectation just by drawing these lines that we have to come down here. However, at the foundation level of the, if you were to break down the actual technicals, then you do see some differences historically versus where we are now. And that, therefore, this expectation may even be void, right? Just bear that in mind. Let's go ahead and take a look at the 2015 bear market low point. Okay, that comes in down here on this low. It was $152 Bitcoin. I mean, fantastic, right? We had the initial pull to the downside here. Okay, we can see that one. And we had a bounce to the upside afterwards. This was followed by a move down to the 1.236 fib level at $152, right? So we can acknowledge that this is a simple three-wave pattern according to Elliott wave theory. And that's it. It landed between 1 and 1.236. There's nothing more to it. Very straightforward, very simple, nothing to worry about, right? Basically a bear market correction that is as simple as a three-wave pattern. We come on over to our low for 2018, where we hit a low of $3,122. Now, in this particular bear market, again, if we grab our fibs, we had our initial pull to the downside, right inside here, and then we had our bounce to the upside, right up to here. And you can see that we landed between the 1 and the 1.236, not as deep as the previous one, okay, but right inside our yellow box area. This also makes it a three-wave corrective pattern, 1, 2, and 3, or A, B, and C. Okay, so we have two bear markets here that are practically the same. They have the same characteristics, right? We have the highs, we come down to the lows, and again, you can see that we don't kiss this this trend line at the bottom here, this curved line, during this bearish time either. It's actually happening much later after the initial pullback. Okay, you can see them both happen here. And this was a little bit lackluster. This one was more potent, but they all come down and test this line regardless, right? So these two setups are exactly the same. So then it starts making us think, okay, well, is the bear market low in? And are we doing the same, setup? Well, we have our high just up here, okay, and that comes in at that $69,000, right? We have our initial pull to the downside, okay, that happens right in here. That was where we were at 32,950, and then we had our bounce up to 48K, right up here, okay, 416, and you can see that if we were to repeat history, we would be landed between the 1 and the 1.236 on the fib scale. But that's not what happened. Instead, we went down to the 1.382. Okay, that means that this structure is not a simple three-wave pattern. Instead, this pattern is a W, X, Y, X, and Z, as we had that new lower low. This is why during that time, when June 22 was around, June 2022, everyone was saying we're in the bull market, it's done, we've had our lows, and I was sat there saying, no, it doesn't make sense that that's happening. It's more than likely that we have to have a new lower low. And then FTX happens and we get that new lower low, right? It's not to say that we knew FTX was going to happen ahead of time. I mean, we knew approximately a week before everyone else, simply because they were liquidating too many people. It was clearly that they needed money. They were in financial difficulty. That was obvious. That's why we were shorted FTT. That's why we shorted Solana. And that's why we were talking about that in our Discord server, right? Another reason that you guys should be joining the Discord server. Okay, so we knew that that was going to happen. But this makes it a WXYXZ, and that makes it all very questionable. We are not seeing history repeating itself here. And of course, that's just from an Elliott wave theory point of view and a fib sequencing point of view, right? There are other things that we have to consider as well. Let's shoot on back here just a little ways. So if I go back to the previous all-time high of 2013, we can see that the bear market of 2018 stayed way above that level. We didn't cross down lower than the all-time high of 2013. Then, of course, we come on over into the peak of 2017 here. We had our bear market and we had our bull market, and then we do come down lower than our previous highs. Okay, so we know that this all-time high was broken for the first time in Bitcoin history over here in June of 2022, right? Again, another interesting, yet something else that hadn't happened previously. So history can't be repeating itself if we're having new underlying variables happening. Instead, history is rewriting itself, and Bitcoin is going to continue to write itself. So this is going to be interesting. So we have another variable here that is different than we had seen previously. And again, we have different fib levels, we have different all-time highs getting broken in terms of coming back down, and there are some interesting things that are still developing. Let's take a look at those. So as we kind of take a look at this WXYXZ, this is our initial pull to the downside. If we run a fib all the way to the bottom here, we can see that all we've done at the moment is rally be up towards the 50% level. So this 50% level, currently at 32,681, it could be resistance for us, and this is obvious because this is also an area of previous support coming to resistance. Now, we know that there's a CME gap. This is basically where we have a different close price for Bitcoin than we have an open price for Bitcoin on the daily time frame. That comes in at $34,000 to $35,000, which actually brings us between the 50 and the 61.8% fib levels. And I do think that 38,984 would definitely be a resistance for us. This is previous area of consolidation. This is a major fib level, and chances are where we're going to get rejected. Now, this is where the bearish stuff comes in. Okay, if we get rejected here, and considering we have no real structure from an Elliott wave theory point of view to the upside, there's just a repeat pattern here, but nothing actually too major, then chances are we're probably going to see this as maybe a B wave movement with a requirement to come on down deeper. So as I said, we haven't touched this line yet, and although I'm saying that history is not repeating itself, this one might actually end up being something that has to get tested at a later date. So let's run that idea for a second, right? If, of course, all of this is just a bear market rally, as me and Chris suspect on the channel here, then we're going to be looking at this as a B wave movement out of a more, or an X wave movement, a WXY structure potentially here. So let's run that, right? An X wave coming down here, a W wave coming down here with an X wave kissing the 61.8 before a Y wave comes and brings us down towards our lower line. Now, if this is the case, our expectations again will be married up to that 1 to the 1.236 level. And again, that would then look like we have a three-wave pattern just on a much bigger scale than what people are probably willing to acknowledge. And if that is the case, then unfortunately, the true bearish situation here that we need to consider is a $6,136 to $8,731 level. Okay, now that's incredibly bearish, and it's not something that people like to hear or like to see. And again, this would put us below this curve. So I'm not saying that's going to happen, but it's something you're going to have to consider. The other things to consider here, one would be how much of a retracement we've had in this bear market so far. We can see that we've dropped down 77%. This would be the easiest bear market in history for Bitcoin as well, if it is in fact the bottom, right? We saw an 84% drop in 2017 to 2018, and from 2013 to 2015, we saw an 86% drop. Okay, so if, of course, the bear market is in, then this is not only the weakest bear market in Bitcoin's history, it's also something else that it's done differently than it had done previous, right? I'm not to say that the bottom isn't in here, just we have to consider that maybe it isn't quite where it needs to be yet. And it could just be that a test of this low line is all we need to do before we do rally on up. But there's interesting things to kind of consider. I'm not here to make a decision for you. I'm here to kind of just present you with ideas and analysis that might counter that of what you're being told from the more mainstream channels. Let me know what your thoughts are on all of this in the comments down below. Personally, I think a retracement is due, a nice healthy one of 20k. Anything lower than that's a bit of a bonus. Let me know what your thoughts are in the comments below. If you found this useful, smash the like button. If you're new, subscribe, and guys, don't forget to join us down in Discord. I don't think you'll regret it. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.